Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Wednesday, January 9, 2013. Well, a change of trend today in the candle. It's made a higher high and a higher low. Previous day's trading, we had a smallish black body candle with a largish shadow on the bottom and a very similar candle to the previous day's trading. Both of these candles highlighted the strong support around the 1457 level that I mentioned a couple of trading days ago. That was going to be a fairly strong short-term barrier to this market. And for yesterday's trading, we saw the market bounce off that level. We saw the sellers lose commitment down there, and today the market opened up down around there and had failed to trade down below there and closed up above there, so a very strong support level moving forward in the short-term time frame. Today's candle with this change of trend is now a white body candle, reflecting the buyers making net bullish progress as opposed to the sellers making net bearish progress for the previous day. But we saw the buyers fail to close with control of this market. They closed around the midpoint level, and neither the buyers nor the sellers have actually taken control of this market, so that does raise some doubt about continuation of this trend to the upside. And the shadow up on top of this candle highlights the loss of commitment by the buyers today, so there is some doubt about whether we can actually trade up to this previous swing high or the important short-term resistance level around 1470 or up to 1474, the major swing high from a few months ago. Now this market, just looking at how it's trading now, is congesting, and if we look at these previous two candles with following the breakout up above the cloud, or this bullish breakout with a bullish signal, and now a market having a rest. And markets move in trending action and then congestion basically, or retracement, and that's exactly what we're seeing now. But if we look at the extent of this retracement in comparison to the previous uptrend, it certainly hasn't been significant, and it says something about the strength of the buyers in these previous two candles and the lack of strength of the sellers. So there is some doubt about whether this market will trade back down to around this 1440 level quickly. It's more likely now that we could see a potential breakout up above around this 1467 level, and the market test up to the 1470 or even the 1474 level. If we do see strong bullish activity up above the 1474 level, we could easily and fairly quickly see the market trading up to around the 1523 area. So very important trading coming up over the next week or two for this market. Now, in terms of the Fibonacci extension, we're examining the relationship of the current first time frame uptrend that the market just moved into today to the previous time the market was trending up, and no interaction with any of those levels yet, and that does suggest that there is good potential for this market to trade higher. The first major level that the market will interact with is 38.2% at 1478, and that coincides roughly with the swing high around 1474. So that will be a decent barrier to this market moving forward. The next levels are the 50% and the 61.8%, and the 61.8% is around 1494, roughly around that 1500 level, and 1500 in a round number will be a natural level of resistance for this market. In terms of the Fibonacci retracement, we're only looking at the retracement of a very short-term first time frame downtrend, but we did today see the market rejected from the 78.6% level. The market also traded above the 61.8%, not too easy to see, but above there, and the market failed to close above there, so that could be significant and may suggest that there is potential for a change of trend back to the downside. But as I've mentioned already, the barrier to that change of trend will be the low of the current candle around 1457, and we should be watching for a potential lower high and lower low if this market is going to trend down. Now, in terms of Ichimoku, we have a bullish market in all three time frames. This market's trading up above the cloud, so it's bullish in the long-term time frame, bullish in the medium and short-term time frames by trading above the Kijun-sen and the Tenkan-sen. If we look at the angle now, especially on the Kijun-sen, the pink line here, that had been pointing up very sharply, reflecting this solid upside momentum that we saw for these two very large white body candles, and now it's pointing flat, reflecting this loss of momentum by the market. And that does suggest with the flat Kijun-sen that there is potential for the market to retrace back towards there. But if we look at the efforts of the market, especially for the previous day's trading when the Kijun-sen turned flat, the market attempted to trade back towards there, but was rejected from below the 1457 area. So that is crucial to this market if there is going to be a continuation of the trend to the upside, or a retracement back towards the swing high around 1447 or the 1440 level.